Trading again. But now we want to focus more on pip perfect precision. I want you to focus on understanding why we can sometimes trade from a perfect zone instead of just a 50% retracement. That is because this happens more rare times than it does instead of a 50% retracement. That's because ranges are different than an absolute price. For example, if I want to buy a product, let's say I want to buy shoes that are $10. Instead of saying, hey, I want the shoes to be bought at $10, I can say, whenever price is ranging from $8 to $12, I want to buy the shoe. So whenever you have a range, you have more probabilities to buy the shoe. But if you're only waiting for that $10, that probability is going to lessen more and more for sure. Same thing with trading. Let's say you want to buy at a discounted price. That's different than wanting to buy from a perfect zone. So what we're looking at over here is understanding that buildup that we always talk about, where the liquidity is residing, knowing that that push happened from here to here, and that push, we know that it is a push to create more and more traps in the market, but it is also a run of liquidity. Now, before that run of liquidity is being taken out, before that bottom end is being taken out, so we have to validate that by having a break, by showing seller control, by showing bearish intent. Because for all we know, this could be a break of structure, a retracement, and then a push to the upside. But now that we know that price has been, for example, tending to be bearish more times than not, or now that we know, for example, that price is bearish from our analysis, we know that after this push has been created, we know that this liquidity has to break. Now we have to have the retracement, and then we have a push to the downside. Now, instead of saying, hey, you know what, just draw the 50% retracement, wait for it, and then take the push, I'll be saying, look for the imbalance. So when we do have clear imbalance, we can clearly see, I've already have some drawings over here. We clearly see that we have price trending upwards, and then we have the push to the downside. Now, imbalance is a gap left by price that is often revisited more times than not. So this is for the pending orders, etc. Everything that price needs to go back and collect in order to move towards the desired direction. It happens in the form of this. So you have price trending upwards then downwards, but the reality is you want to be able to see how price is leaving these gaps. And it's, for example, between the wicks. So you know how you have this over here, but then before that push happens to the downside, you have the start of here, and then the top of here of this wick and the bottom of this wick, you have this gap over here. And this gap in the middle is what we call imbalance. Now, when that gap is revisited, we call this mitigation. It's the fill of the gap. So going back to the charts, I know this might sound, some foreign language to you, but really is quite easy. I'm going to give you a very, very simple and clear example. So like we always talk about, build up this and then this. We need a break from this, retest, then boom, right? So what are we waiting for now? You're waiting for bearish intent. So now I'm going to let price play. And then after we have the break of the bottom, we know that sellers are now gaining control over and over again. So what we see is, instead of saying, hey, you know what, get that 50% retracement, look for it over here, and once it comes to that 50% mark, sell. This could be an option for you if you don't want to miss trades, right? But taking that lower low, this is how you move your risk to reward from 1 to 3 point, to 4. And that means that's how you make $4,000 instead of $1,000 by simply having that perfect zone, because it makes sense. Notice how we spoke about that break happening. Notice how we spoke about the 50%. Now, if there's not much distance between the 50% and that imbalance, well, then you could choose either or, and that would be completely fine. But I don't want you to be missing trades because of this. More times than not, imbalance will be filled as long as you pair it with intent. So that imbalance over here is that zone over here. So that last candlestick before the push is the imbalance. So we mark that as a supply zone. And we wish for price to be revisited at that point over here. So now that we know that we have that break that created the high, so we'll mark this as break of structure. After we have already succeeded and marked this as break of structure and it has been validated, not only do we have build up liquidity sweep paired with break of structure to validate inducement, then we have pushback to the upside. Now we're only waiting for a tap into it to then create that lower low, right? So we have price moving into it, we have that tap, and then quickly after we have rejection, and then price goes on to create that lower low, and there you have it, a 4% trade right from the get-go. Tap and go, that's what you want to look for. Done.